with Karen Moscow and John Bascom. On demand via our Bloomberg Radio Plus app, free for iPhone and Android devices.
Mike Franklin is Chief Investment Strategist at Beaufort Securities, joining us on the line from London this morning. Welcome, Mike, and just tell me in the simplest terms possible, if you will, what you think is going on with Wall Street.
Good morning, Bob. It's presumptuous of me to comment on what Wall Street is doing, but technically I know we're approaching quite a significant level for the S&P 500, and this means comparable to what happened in 2000 and in 2007. So I'm sorry to be the bearer of slightly cautious news at the end of a week when everyone's starting to think about the weekend. But we have to be aware of what is going on. The situation in Ukraine is obviously difficult, and that has big implications for Europe and in turn the UK. We're obviously also concerned about what is happening in China. It's not quite clear what to make of the data stream there. And similarly with the US, we're still not quite sure just how strong the underlying economy is. If markets do have a sell-off, it may not be immediately apparent what the trigger for that loss of confidence is.
Okay, hello and welcome in from Sunnyvale, California. I'm Mark Vierra, and this is my weekly technical analysis video that I put together with my weekly trading log. This video is not about any buying or selling recommendations, just going to take a look at the week that was and see what kind of clues I can get from the charts as to where I think the market is heading, we'll say. So let me queue up a few charts here, starting off with the monthly. Alright, so this is a S&P 500 monthly chart. I've got resistance and support line drawn in, and I have not moved this flag. These lines have been in here for a while. This is, we're about halfway in the month, and this is the candle that we're looking at right now. And this is a bearish candle that is near random in my study these candlesticks. Some I like better than others. For instance, I'll take a tweezer reversal here over, this Haramite, any day. Morning star, shooting star. Some I think I like better than others. In any case, this is a bearish candle that actually acts as bullish continuation most of the time. Price is right at the top flag. So what happened is during the month so far is we got support off of this line. There's psychology with these chart patterns is working in conjunction with many other variables, and that's why I like looking at chart patterns. Like looking at a lot of things. We're going to look at trend lines. We're going to look at some Fibonacci numbers, some moving averages. Not that I put too much stock into it, but I compare it with the other studies, and of course volume is my favorite. I think you get most of the clues off of volume. So what else? Besides chart patterns and volume, moving averages. Well, let's see. I've got lots of images here that I'll be uploading to HotStockMarket, my trading log, and all YouTube viewers. You'll see links in the About section. So let me queue up some weekly charts. Okay, we have a wide lens view of the weekly chart, just to see where I got these trend lines from, because we're gonna zoom in here a bit, and this blue dash line has been a pretty good pivotal intersection that we are now looking at this trading range right now. I think a breakdown to this 1820 will be respected by the trend line. We should see a bounce, I believe, off of that trend line. Now I can go back and I can count the touches of resistance and more. That this thing hits the support levels. There's a school of thought that says that the more likelihood that this could break down. I think most of the time price will respect a trend line, okay, And now the other weekly chart that I have, we'll get more into candlesticks here. This line right here is longer term or intermediate term of the neckline. This inverted head and shoulders. I have measurements on the daily, more defined, but this kind of gives you a rough outlook of where price is. To me, this is semi bullish in nature, that we've come out of this head and shoulder neckline. Of course, last week we had this. I had a rising wedge drawn in here, kind of a bearish rising wedge is pretty good. It just says you're parabolic and you're not going to stay that way forever. And of course, we broke down out of that rising wedge, and we're testing the top of this inverted head and shoulder neckline. And I think that is bullish because it's a secondary test. The market wants to check supply, see how much supply is going to enter the market. I think that the downside is going to be limited to the bottom of this trend line. Okay, that would be my worst case scenario. Of course, worst case scenario would be a break below that, but I just, from past experience with this bull market, I just don't see the charts telling us that we're that bearish. You can also look at this too, sort of an engulfing, how it's taking up the previous candle body. The bearish body of this is coming down, and it's completely engulfing the previous candle, along with same as these tweezer bottom reversals. You could look at this as a tweezer top. Okay, so that's marking out what ultimately I believe is going to be a very stiff resistance to get through. So it's going to take time to get past that point. What else can I say here? I'm marking out 1840 is pretty much current price. We'll get into some near-term charts, but in terms of the intermediate chart, I would say that this is a bearish candle. We had a bearish week. We're off 2%, and my thoughts would be, if it came down to this 1820, I don't think it's going to get much further than that. And the reason why is, let's take a look at some other things here. Okay, just a quick rundown with weekly Fibonacci extension. We're going back to this previous low, to this high, little pullback, and this shows us the extension. And of course, 50% is the one I always point out as being probably the most important Fibonacci number. So that's where we're getting support at currently. And now taking a look at a retracement, that 50% actually puts us quite a bit lower. Actually, that would be coinciding with this previous top. So tops become bottoms. That's just a typical price action in terms of technical analysis. Tops become bottoms, bottoms become tops. Right now, the market's focused on this previous top. 38%, I think, would be the next area of strong support at around the 1830 level, and then below that would be 1810. Whether it gets there or not. Now this, remember, weekly chart is your longer term chart. This is where weekly round top. Initially I measured it at 1850 just to give me some measurements. That's where price is at now. If I go to the top of these candle bodies, and I really want to be a little more specific about the level, I'm looking at 1840 as being support. I think it's likely we're going to see a bounce off of that level. Of course, we'll get into volume, and that's where it really kind of comes together. Just going through these trend lines to give a preliminary kind of look at what the market's doing right now. Alright, daily trend lines. This is just a wide lens view of where I have these support resistance and a median pivot, center channel pivot. Not going to spend too much time on this, just to show that we are still in the upper trading range of that area. This line that I have marked, we'll get into have a better view of that with my chart pattern worksheet page. Okay, so moving averages, we do have our near-term moving averages. The 5 is about to cross the 9-day moving average. We still have somewhat of a rising 20-day moving average. The 20, 50, and 100-day moving average here. Let's scoot this over. We're the 20 and 50 day look to be flattening out, but we still have a rising 200-day moving average. So we have a bearish week, but moving averages, the daily Fibonacci retracement is probably the most bearish chart that I have, because the 50% on here is just like the weekly 1810, 1811. That's where I think the ultimate line in the sand would be, down at this level. But I'm also looking at the 38% is coinciding with this previous tweezer bottom reversal. I think this is where we saw a good bearish candle and was bought right back up at this 1830 area. So it's hard to say what's going to happen in the future, but and this previous top here is coinciding with the 23%. Of course, being below that would leave open this 1830 area. So 1830 is more bearish than 1840. But let me look at this chart pattern worksheet here. Let me get this up in here. This is where the neckline on this is sort of down sloping, because I'm looking at this being a shoulder here, and it's also the top of this flag. So that's really coinciding right where we found support so far. I'm almost leaning for this support to hold, but it would not surprise me at all. And the bottom of this flag is the tweezer bottom reversal. I think is ultimately, I think that's where price would get a good springboard bounce, I think, off of that level. That's Tuesday we had a hanging man, and we saw some bearish action. This hammer candle didn't really mean much the next day. This is a pretty good bearish candle here. What else can I say? This is a round top. Have measurements on that. Putting in the downside measurements only. And we'll see if it breaks this level here, then that would be measurements to the upside of this rounding top. But since we're down on the support end of the round top, I put measurements on that. We can take a look at the measurements on the round top and see where does that get us here. 1840, 1830. So these patterns and Fibonacci's, moving averages, the 50-day moving average, if we want to go back to and look at that, I think that's 1830. 1830, between the 3 different studies, maybe 4 if you want to count trend lines, 5 if you want to count tweezer bottom reversals and candlestick patterns, are all coinciding. It's amazing how these technical analysis numbers can coincide with and complement each study. But get really into the meat. Okay, I have a bunch of volume charts queued up here. I think let's shrink myself out here. I have this level marked. This is where we're really getting low volume cues from buying climax. Of course, it's almost a lot easier to see selling climaxes have always been at these upper levels, which we do have somewhat of a volume spike on this candle. So that does represent a lot of activity looking at volume by time. But I think volume by price, this huge 3-month point of control, this volume node, I think is where we will see a springboard event. This is where I think a lot of activity is going to push price up. So that's probably the most simple volume analysis that I'm looking at. And let's see, value areas down here, that would be of course a lot of buying activity. What else? I was looking at on the S&P chart at this previous tweezer bottom reversal, and that comes in at 183, and there's a nice little node peeking up right there at that price. So I don't know. I'm just speculating like everybody else. I like looking at technical analysis. Fundamentals and news events are so convoluted. Blaming it on Crimea, Ukraine, and China, and all this business, and emerging markets are up. Small caps are up. So I think it's possible that the reality of Fed tapering with no economic news probably is playing more of a role than anything else, I think. But headlines, it's a human nature to try to make sense of things. This volume node right here was a good pivotal mark. This is an hourly SPY chart, and this high volume node that we broke below is a pivot. And I drew in an hourly flag here, put measurements, and I'm getting, this is the 184 area. Now you'll notice also I'm using a multiplier. Well, okay, why not go equidistance? Because the conservative targets work better, and especially in a bull market, I'm looking at it's an overall bull market, and I'm looking at a bearish pattern. Of course, I'm going to say that the conservative multiplier is going to have a far better chance than something going equidistance. Another evidence that I have here, this is another daily chart. This is Thinkorswim's version of a market profile. Get into another market profile, but this is just a basic. These shaded areas are 70% of the volume activity for that month. This is the month of March right here. This shaded area, if you can see that. And anytime price gets out of that area is telling you, okay, we're out of a high volume activity area. And most of the time what happens when you get out of a playground is price will move back up into the playground. So I think of a playground as a magnet where price is attracted to that. And the other key things to note here is all these yellow areas here. These are the time price opportunity. This is the highest volume activity within the playground. And these are all sort of lining up to each other. Okay? So I find that as going to be that, let's see if I scoot this over here, we can actually see, that's this 184 level. And then 183 down here at this other high volume node, I think would be the ultimate line in the sand, given what I'm looking at in volume. So let's look at some monthly composite. Now, in the monthly composite, previously last week I had said that this P shape, we would likely form a B shape, to get a bell curve forming down here, and that's where we have. This is where price is right now. We opened right here. This was our initial balance to start off the month. Okay, And I do think that we are going to form a bell curve in this area. So the composite is coinciding with the other volume charts that I'm looking at. And that, again, it comes down to that 183, 184 level is where I think that new bell curve. These are called bell curves. Okay, that's where volume is dancing around. You know, normally the point of control and the TPO, and that's good structure, and we had a nice bounce off of that structure. So now we have our P. I think it's going to form a B, and let's look at the next composite that I have, and the final volume chart. Let's see, what do we have here? Okay, well, last week was about half right. I thought our initial balance would start off here, but it ended up going a lot further to the upside than I had anticipated. You know, this week I think our initial balance is going to be another long initial balance in between the point of control and this TPO up here. And again, I think that, you know, the bell curve will be forming down in this area here. So we'll have, I think, good structure off of this bell curve. We'll see. What else can I say about this? This is a weekly composite. I have it on a daily chart. These are weekly. Each one of these. This is this week, and next week will be, you know, over in this area. And I suspect, again, I think, you know, the initial balance is going to be an overlapping between the bottom of it. I think will be down near the point of control. I think we'll see a support bounce off of that, and I think this is going to happen too pretty much early on into the week. We'll see. The reason I say that is because price is close to that area already. So next up, we're going to look at risk on and off asset U.S. Treasuries. And U.S. Treasuries are just off the hook. We saw a lot of money flowing out of stocks and into more of a safe haven area. Now, I don't know if this is enough, you know, of a volume spike actually to, you know, to say climax. And I want to say I think that that U.S. Treasuries could run more. You know, I'm kind of got mixed feelings on U.S. Treasuries. You know, if we draw a trend line here, I think same with the stock market. I think there is room for Treasuries to run, just like there's room for stocks to run lower, to hit some more supports. Ultimately, I think yield right down at this level here. If we broke below this level here, then, you know, we could be looking at even more of a bearish stock market than I'm thinking it is going to happen right now. U.S. dollar, I think. Let's see, get my pin ready here. I should just keep myself on this side. So U.S. dollar is showing me strength in the move lower. You know, this is a huge stopping volume, sell climax. This lines up with previous amount of volume. I think the dollar is done moving lower. So a higher dollar does represent you know, a bearish stock market in terms of value, not so much as a risk off safe haven, but also in terms of value. What do you get, you know, for your buck? So that's not looking good in the bullish thesis, you know, in terms of the U.S. dollar. And the mirror image of that on the euro is, you know, this upthrusting candle here. but not on as high as volume as I would have liked to say, okay, that's a you know, a blow off the top. That's just not enough. For a blow off the top, you need to have at least enough volume as previous climax volumes. You know, if we go back, you know, this is the amount of volume that we had on the previous. You know, that was pretty much a blow off the top size of volume, and I'm seeing that here. But we built a consolidation bull flag and pretty much met a conservative target on that flag, and then sold off from there. So I think the euro is done moving up. I don't need to see that much volume. When I see an up thrusting candle like this, that is my clue that euro's looking weak. That strength that's showing me weakness in the background. So that's all I've got for a video. I do think that we do see some lower prices, but I think they'll be bought up. When? I'm not sure. Of course, nobody knows for sure. You know, for all I know, the stock market could keep going down, but I really doubt that's going to happen. You know, you want to see my trading log on HotStockMarket.com. Good source of information here is subreddit stock market. Can post questions in there and get involved in discussions in there. And then I will have all these images. This is my previous trading log. And that's it. I hope to see y'all on the boards.